The VA funding fee is a governmental fee applied to every VA purchase and refinance loan. This fee goes directly to the Department of Veterans Affairs to help cover defaults and to keep this loan program running for future generations of military buyers. The fee changes depending on several factors, including the nature of the borrower's service, whether the borrower has used the benefit before, the type of loan, and whether there's a down payment. Regular military members pay slightly lower funding fees than reservists and National Guard members, and borrowers with service-connected disabilities and select others might not have to pay it at all. So first, let's take a look at the funding fee breakdown for VA purchase loans. So active duty and veteran buyers with regular military service, they will pay a little bit less than guardsmen and reservists the first time that they're using this benefit, so 2.15% versus 2.4%. Now, as you'll see, making a down payment, it decreases the funding fee in both cases. That's for both first time and repeat. And we'll talk in just a moment about repeat use of the benefit. But next, let's take a closer look at refi funding fees. So the VA has two refinance products. There's the interest rate reduction refinance loan, also known as an IRRL or a VA streamline, and then there's the cash out refi. So the funding fees differ significantly between them, in part because of their objectives. So the IRRL, the VA streamline, it exists to get current VA homeowners into a lower rate mortgage or to get them out of an adjustable rate loan. The cash out allows qualified veterans to refi and extract cash from their equity, and it's open to qualified veterans with and without VA loans. Now, unless they're exempt, all VA homeowners pay the same funding fee on an IRRL. It's 0.5%. It's regardless of their service history. And the funding fee breakdown for a cash out, it's really pretty similar to what you see for a VA purchase, but borrowers cannot lower their funding fee on a cash out by contributing a down payment or by using equity. The mortgage lenders will verify your funding fee status during the loan process. The certificate of eligibility, the COE, that will usually indicate whether or not the borrower has to pay this fee. Now, you'll pay a lower funding fee the first time you use this benefit. So the rate rises for all future uses of VA loans unless you're getting a streamline and IRRL. That stays at 0.5%. So lenders will collect and send the funding fee payment to the VA through an automated system. Understand that lenders have no control, none, over a borrower's eligibility for the funding fee or an exemption or what they're required to pay. That's ultimately the VA's call. Now, in terms of actually paying it, VA buyers can ask the seller to pay this fee on their behalf. The seller can contribute up to 4% of the loan in concessions, and this is counted as a concession. The buyer can pay it in cash, or the buyer can finance the funding fee into their loan. And that's what most VA borrowers choose to do. They choose to finance the funding fee, which on a VA purchase is the only closing cost that you can actually roll on top of the loan. And just to give you a sense, on a typical $200,000 first-time purchase, a regular military member is going to be financing an additional $4,300 to cover the funding fee. So that's a $200,000 loan times 2.15% is $4,300. But there's a sizable portion of VA borrowers out there who don't have to pay this fee at all. The VA exempts certain borrowers from paying the funding fee on either a purchase or a refi. Those who don't have to pay the funding fee include veterans who receive compensation for a service-connected disability, veterans who would receive disability comp if they didn't get retirement pay. There's also cases where veterans who are rated as eligible to receive comp on the basis of a pre-discharge exam or review. Now, veterans can also be exempt if they aren't receiving compensation because they're on active duty, which does happen. They're eligible, but they're on active duty. And surviving spouses who are eligible for a VA loan also don't pay this fee. Now, when evaluating funding fee exemptions, lenders will typically look at the COE, the certificate of eligibility, or a verification of VA benefits. For veterans who receive retirement pay instead of VA comp, lenders can use a copy of the original disability rating notification and financial documents that show that retirement income. But there are situations where the exemption status isn't really clear-cut. Again, only the VA can make a determination regarding funding fees and funding fee exemptions. Lenders are required to collect that fee and send it to the VA in cases where the borrower's exemption status can't be cleared up before closing. Borrowers who have a disability claim pending at the time of closing are required to pay this fee. If the veteran is awarded disability comp after the loan closes, it may be possible to get a refund of the VA funding fee. And we have a separate article and video that really takes a closer look at VA funding fee refunds. Now last, let's look at a few common, if not rare, scenarios where the funding fee can look a little different. So we'll talk about some unique cases. So when two veterans with VA loan entitlement get a loan together, the funding fee is still in play. A major consideration is who's contributing VA loan entitlement. So if two veterans are each contributing entitlement, but one of them is exempt from paying the funding fee, they still have to pay the funding fee on their loan, but it's cut in half. That fee is cut in half. Now, if this same set of veterans is seeking a VA loan, but the veteran who's exempt is not contributing entitlement, then their loan would have the full funding fee. This chart would be right back in play. Now, in the rare instance where two veterans are each contributing entitlement and using the benefit for the first time, but one is regular military and the other is Guard or Reserve, it's relatively rare, but it does happen. The funding fee would be the average of these two numbers, and that comes out to 2.275%. Now last, VA loan assumptions, they also come with a funding fee, and these aren't incredibly common either, but they do happen, and the funding fee on an exemption is 0.5%. Talk with a Veterans United loan specialist if you have questions about VA loan closing costs, including the VA funding fee.